Thank you for registering for your free lesson with the Note Factory Academy. Would you like to become a serious note investor? If you want to become a player in the note investing arena, begin by building a solid foundation of knowledge with the complete version of Module 1 by the Note Factory Academy. To purchase the complete version of Module 1, go to thenotefactory.com. Click on the Academy, scroll to Module 1, and select Add to Cart. When you purchase Module 1, you will be given access to the Academy member library where you will be able to view your Module 1 video lessons and download the digital version of the module. You will also be mailed your glossy cardstock color hard copy of the Module 1 booklet free of charge, so you can follow along with the video lessons and take notes during the course. Prior to beginning the module, you will be given a free phone consultation with one of the principals of the Note Factory who will help you to develop your own note investing strategy based on your unique financial goals. We look forward to helping you on your path to becoming a successful note investor. Use the table of contents on the left side of the screen to navigate to a specific lesson. When you click a slide in the table of contents, you will be taken to that slide in the course. After each slide, the course will pause, allowing you time to digest the material on the slide and make notes in your module brochure. When you are ready to move on, click the play button to continue to the next slide. Let's get started with Lesson 1, Investment Strategy Overview. Lesson 1, Investment Strategy Overview. What is seller financing? Seller financing is when the seller of a property takes the place of a traditional mortgage company or bank and lends money directly to the buyer. The buyer and the seller sign a document defining the terms of repayment, including the agreed upon interest rate, the number of years to repay the loan, and the monthly payment. This document is called a real estate note. Here's a sample of the financing terms in a typical real estate note. We have the effective date, the borrower's name, the borrower's mailing address, the name of the lender, the place for repayment, the principal amount of the loan, the annual interest rate, the maturity date, and the amount of the monthly payments. Let's go into the process behind creating a real estate note. Step 1 is acquisitions. The first step to create a real estate note is to acquire a property below market value. The basic idea here is to acquire a property below market value in an area where a quality buyer would want to live. We will give you our definition of a quality buyer and show you how to find them in an upcoming module. Look for distressed properties that have the potential to become some of the nicest and most desirable homes in the community. This will ensure a quick sale.
We want to chime in here to talk about the importance of getting the property at the right price. I mean, how many times do we see new investors that come in, they're all excited, they took a real estate course, they read real estate books, they run out and they got their first property. No. And then they call us, hey, can we get some input on you? We go over there and we say, you paid $10,000 too much, $20,000 too much. I mean, that happens all the time. You work a lot of the acquisitions, the sales guys are doing.
There's a number of different ways you can find houses. I mean, just a couple off the top of my head, you've got Facebook, you've got Craigslist, you've got bandit signs, you've got driving for dollars, you've got, vacant houses, probate, auctions. I mean, the list goes on.
Yeah, and that's the thing. I mean, the mechanics, you can find that anywhere. Hey, how do you find a good deal? I mean, whether starting with the MLS, having realtors email you the stuff, that's really not the point. The problem is, the biggest thing that we see is that people come in, they think, hey, they had a house that was listed at 80, and they picked it up for 72.
All right.
And they're jumping up and down and doing handstands, and the reality is they shouldn't have paid 72, they should have paid 50 or 55. So the point is, it's kind of like we always talk about driving around about getting married. I mean, you have to take your time, make sure it's the right house. That is the hardest part of the whole process, wouldn't you say?
Yes.
Or the most likely place to mess up, right?
Yeah, when you have someone that's willing to sell you a house and you're willing to buy a house, it's hard to walk away from that house, and people tend to just buy it because they can.
You're right. Or because it's a foreclosure. There's another one.
Yeah.
I mean, how many times we've been to foreclosure auctions and we're sitting there looking at each other going, can you believe what they just paid for that house? We would have paid, maybe our target bid was 70 and we just saw someone pay $94,000 for it. So there's a never-ending stream of new investors, and our job with this course and our mission with this course is to teach you the nuts and bolts of how to find properties, but also teach them in the later lessons on how to crunch the numbers and make darn sure that they're buying it at the right price.
Exactly.
If you buy it at the right price, then the rehab goes smoothly, right? The sale goes smoothly because you're selling the house at market value, right? And you're not having to inflate the price. As you say, pray to the flip gods that something goes right. So we just wanted to chime in to make sure we drove home the point that in the later lesson, we're going to go in and teach you not only the mechanics, but also the philosophies and how to crunch those numbers so that you make a profit every single time.
Excellent.
Step 2 is renovation. Step 2 is to make renovations to the property. The goal of the renovation project is to make a home one of the most desirable properties in the neighborhood and deliver a home to the market that stands out as one of the nicest properties on the block. We will teach you how to buy homes well below market value so that you have a healthy budget to invest in the home during the renovation process. This will ensure that your home will be easy to sell at market value and you will end up with a highly profitable real estate transaction. Buying a property below market value and renovating it properly puts you in a great position to create a high-yielding real estate note. You will learn the number one mistake new investors make in the renovation module to come.
I just wanted to make a few comments on the huge distinction that we learned kind of the hard way, but it turned out to be a huge blessing, and that is the difference between renovating a home that you intend to sell or finance with one that you intend to flip. Back in our flip days, remember? I mean, stainless steel appliances, granite countertops, everything under the sun. We felt like we couldn't even get a property sold unless we did everything. And with seller financing, you are bringing so much value to the buyer by offering seller financing terms. The bottom line is they just really, you don't have to deliver as, how would you say it? As nice of a home without, you still deliver a very quality home, but the point is there's so much value there with the seller financing that they will overlook a lot of other issues. And the reality is, from a dollars and cents standpoint, if you don't have to spend as much money on the renovation, it just means more money in your pocket.
Yeah. Whenever you're flipping a house, what you have, your selling points are your granite and your upgraded appliances and things like that. With owner financing, what's attractive with that is the terms.
Exactly.
And so we would rather, put less money into the house and offer
Yeah, and that's just a huge distinction. For all you people that have flipped homes in the past, you can relate to that, spending all the money and you're competing with every other buyer in the marketplace. When you are offering seller financing terms, there's such a demand for seller financing. The quality, if you will, of the repairs is kind of secondary to the financing.
Exactly.
So we just want to make sure you understood that distinction. We do go into a lot more detail, of course, when we get into the renovation lesson, but just wanted to make sure we drove home that point now and later on in the module.
Step 3 is to find the right buyer for the home. After renovations and improvements are complete, you want to put the house on the market offering owner financing. Owner financing and seller financing are terms that can be used interchangeably. Because of the huge demand for seller financed properties, you typically will not have trouble finding someone that wants to purchase your home. The challenge is to select the right buyer who is willing to make a significant down payment and has the character and income documentation to justify selling them the home. We have a complete module dedicated to character underwriting. This module will teach you how to attract and select the most qualified buyers to ensure that your notes get sold for top dollar.
So we just got through talking about finding a home buyer. And the difference is you want to find the right home buyer. There's a huge distinction between the two. And that's what separates us from our competition. That's what we're trying to teach you so that you can be better than your competition. Finding the right home buyer is what will separate you and what will make your life a lot easier when you're creating these notes.
Yeah, and that's the number one rookie mistake that we see, whether it be a rental home or or an owner finance situation, is people they've got a vacant house, they tend to want to take the first person that comes along with some money and get them in there so they can start generating income. And that is an easily understandable thought process. But what you realize is kind of like getting married. You know, you want to make darn sure you get the right person, because that stream of income, the idea there is to have that stream of income going on for a very, very long time.
Exactly.
So don't make the rookie mistake of getting the first warm body in there. We have an entire lesson dedicated to character underwriting and attracting and finding the right kind of buyers.
Exactly.
Step 4 is to sell or hold the note. Step 4 is to sell the real estate note. Later in this lesson, we will go into much more detail on how to package and sell notes. For now, think of a real estate note as a ticket that gives you the right to collect the monthly payments from the borrower. This stream of income can be sold to an investor, or you can hold the note yourself and collect the monthly payments. When you sell the note, legal documents are prepared to transfer the note to the new investor, and these documents are recorded. In an upcoming module, we will teach you where to find qualified note buyers and how to work with banks to hold notes so that you can get 100% of your working capital back into your pocket.
One of the things that we struggle with and debate and argue about and fight about every week is which notes we're going to hold, which notes we're going to sell. And we always use the analogy, it's kind of like digging that oil well. You know, you dig the oil well, the new investor, when we sell the note, they get the stream of income or all the oil that's coming out of that note. And if we do get paid to dig the well, right? I mean, if we sell the note, we do get paid, but we much prefer to hold as many as we possibly can.
Exactly, without going broke.
Without going broke, yeah. Because obviously the beautiful thing about selling a note to a private investor, like we talk about in the whole process, it's like flipping a house, because you realize your profit when you actually sell the note. But at the end of the day, that's one of the balancing acts that you have to do, is to figure out which ones you're going to hold for long-term streams of income and which ones you're going to sell for immediate cash.
Let's review the entire process. Step 1 is to purchase the property below market value. Then step 2 is to renovate the property. Step 3 is to finance the property to the buyer/borrower. Once the note is created, then you have the option to either sell the note to an investor or hold the note yourself. Let's conclude this lesson with a quote by Napoleon Hill. Definiteness of purpose is the starting point of all achievement. Don't be like a ship at sea without a rudder, powerless and directionless. Decide what you want, find out how to get it, and then take daily action toward achieving your goal. You will get exactly and only what you ask and work for. Make up your mind today what you want, and then start today to go after it. Napoleon Hill. This concludes Lesson 1. Please take a minute to review the material in Lesson 1. When you're ready, move on to Lesson 2. We'll see you there. To register for Module 1, go to thenotefactory.com. Click on the Academy, scroll to Module 1, and select Add to Cart. When you purchase Module 1, you will be given access to the Academy member library, where you will be able to view your Module 1 video lessons and download the digital version of the module. You will also be mailed your glossy cardstock color hard copy of the Module 1 booklet free of charge, so you can follow along with the video lessons and take notes during the course. Prior to beginning the module, you will be given a free phone consultation with one of the principals of the Note Factory, who will help you to develop your own note investing strategy based on your unique financial goals. We look forward to helping you on your path to becoming a successful note investor. See you in Module 1.